So I'm really excited about, making my life look as similarly in Lagos as it does in London, which is not always the case. Which is not always the case, but I am basically the CEO of a company called BabyBliss. We're currently operational in Nigeria and Kenya, and we're trying to build Africa's #1 mother and childcare platform. And what our platform basically does is it allows mothers to come on board and find products and services that are relevant to their needs. It also enables them to form communities and access relevant localized content. So it's really very specific to the African content. So that's what we're doing.
So going along the theme of this week's chat, all of you guys are in multiple markets within Africa. It's great to hear that you're in both East and West Africa, Toyin, and Falgu, that Paystack is expanding in a number of different countries all throughout Africa. I'd love to hear from all three of you on how you chose some of the markets you're targeting. And what are your long-term expansion plans? And does that include outside of Africa?
Falgu, do you want to start us off? I feel like from your vantage point, you have a good view on that.
Sure, happy to. So I guess we can take the journey of Paystack back to 2016. The company was founded by two Nigerians, Shola Akinlade and Ezra Olubi. And that year, Paystack was the first Nigerian company to be accepted to Y Combinator. Over the last 5 years, they have built a very robust and reliable payment acceptance platform. And I think one of the keys to success there is building extremely strong partnerships within Nigeria, which was country #1. So we partnered there with all the major banks, with the real-time payments infrastructure, with the telcos. And we've I like to claim the most reliable product in Nigeria. And going from that experience, we have recently launched in South Africa a few months ago, again, looking to build that same kind of reliability and go very, very deep. I think sometimes there's a trade-off that companies can make between, launching countries just with a bare bones product and not paying it too much attention, versus trying to really build from the ground up, have teams based locally, and go very, very deep. And that's what we want to do, is understand our customers' pain points and solve the problems with local stakeholders, like the financial partners, the regulators, so that we as Paystack can, undergo our mission, which is to enable the internet economy to scale locally. So having said that, we're live in Ghana and South Africa, which we see as two of the most kind of high growth developing internet markets. So from our vantage point, we're really looking for the next crop of countries outside of Nigeria, where there is a growing internet economy, where there are merchants who are looking to go online, build internet-based businesses, or build fintech businesses on top of ours. So our expansion plans for this year, we're looking to expand in a kind of hub type model. We see countries where entrepreneurship is booming out of, say, one country from a regional perspective. So for this year, we're concentrating on Kenya out of East Africa, and also Egypt out of North Africa, where we see a lot of activity on the entrepreneurship side, and take it from there. It's a big challenge because, especially in the fintech world, you're really facing 54 different markets from a regulatory perspective, from a how the infrastructure is set up locally. So we have to make our bets carefully. I think we are very kind of concerned and focused and pay attention to what's feasible, and we know that we can't just be everywhere overnight.
So that's interesting. Yeah. You mentioned the top markets, obviously, Egypt, Nigeria, Kenya, South Africa, and also Ghana, which is growing very quickly. A lot of these countries already have quite stiff competition in terms of fintech companies and payment providers already in there. How do you see yourselves stacking up against some of them, and how do you compete against the local players as a pan-regional company?
Sure. No, it's a good question, and one that we really have to think deeply and hard about every time we think about new markets. Look, there's competition everywhere, but I think the crux of Paystack really is that we have built this very reliable, very robust platform, and merchants really trust that, and they trust the brand. And that's been extremely powerful for us, even as we enter new markets like Egypt, where there might not be a natural association between a Nigerian company and an Egyptian company. But we've been, shocked by the fact that the services that we've provided in Nigeria have gone noticed by merchants in Egypt. So there's certain features like subscription billing that just don't exist in that market, or where, fraud capabilities are lacking, or where dashboards aren't as good as they could be. And people have seen our solution in action in other parts, and know what we can do. And so having built an extremely strong product, from both an engineering and a design perspective, we feel confident that we can place ourselves, very well within these markets from that perspective. There's a long way to go still. We position ourselves as the go-to choice for developers. And given that African continent is developing their developer communities very strongly, very locally, our name is out there already from that perspective. But you're right, there is a lot of competition, and we have a lot of work to do to differentiate ourselves.
Thank you for that thorough answer. Melvyn, love to hear from you.
Yeah, and so it's interesting building on that wave. I think about our product. It isn't as, let's say, country specific as, let's say, for example, payment regulation. But the interesting thing for us was it was actually our customers that informed our expansion trajectory, at least for a long period of time. I'd say probably until we got to about Series C. And then thereafter, we then were a bit more proactive in terms of the actual geographies you double down on. Obviously, it's product expansion within different verticals and so forth. But the reference on our journey fairly early on, I remember we launched our website and we got an inquiry from Mexico. And now this is fully understand, we had nothing in our platform in Spanish at all. And just going through realizing with tech where your storefront is international. And so you can't even limit where you may go, but you can also be intentional about where you invest. And so definitely for us now, thinking through what are the next markets for us, just because we have teams out of 9 markets, but service clients in over 20. And so for us, it's then thinking through how do we either change our go-to-market or our product for the market. So for example, what we found, let's say, launching in Africa, there's a big focus in education space on certifications. So, I mean, when we, our clients have in Nigeria, South Africa, Kenya, Uganda, same thing, where they're very big on, I do a course, I want to get a certificate or some form of certification. Whereas you find in the US, even like Australia, it's almost like, look, it's almost on-the-job learning. As long as I get the skill, I'm just concerned about the certificate. And so it's more so those nuances, which I quite like in our space, because some of those hold across geographies. That being said, though, the reality is if you're doing something like anti-money laundering training in our space, it is unique to geography by and large. And so there are some nuances. But these days, to your question more directly, what informs the markets we're targeting is almost proximity to our existing markets, and maybe we can grow through our clients or our partners, but also more importantly, where the size of the prize is the largest. And that's why for us, so we did Y Combinator as well, similar to Paystack as well. And we were very intentional about making a play for the US market, because in corporate training, that is the world's biggest market at this point in time. And so you can go to the US and be a market capturer, whereas in, let's say, many African countries, you almost end up being a market maker and sometimes pay higher to make that market.
So that's a great point around going to the US markets, because oftentimes we think about adjacent markets, whether that's geographically adjacent or markets that have a similar economic profile. But it's interesting to hear from your perspective of going into a very different market from your original, which is the US. All that said, what I find interesting about the South African market is that you do have a dual economy there, in the sense that you have both a developed and developing market. And so I wonder if there is an interesting opportunity for South African companies who do understand and can play on both sides, bridge the gap between developed and developing. Is that something that you guys are thinking about or looking to do, or is that something that is irrelevant to your business model?
No, and look, 100% relevant. I mean, in the early days, and I mean, look, we paid school fees on the way there, but I mean, we used to have guys outside the US doing night shift selling into the US, but there's something to be said around, having the familiarity of accent, being available for support in their time zone. And as you scale, it gets easier to do that. But definitely, look, now we have 2 offices in the US. But I think when we started out, we literally used to have a night shift sales team that used to literally stay up at night and send to the US. And so you do find that there are a number of companies using Africa as I'd say a place to find product market fit as a first instance. And I think about like I think about WooCommerce, I guess Get Smarter to some extent, and all of them have done fairly well in terms of their trajectory, in terms of the valuation in their companies. And so I think there actually is some form of arbitrage in doing that, because the reality is that your costs, so we did Y Combinator, and I remember looking at, we really should hire developers in the US, and the cost of a developer compared to the markets we're in is significant. And so you actually are able to, if you're able to localize and go really strong on localization, to some extent, almost have the ability to play and pivot, and then use those expertise to then go global into those more competitive markets.
Yeah, I mean, I'm a big believer in that investment thesis of African companies, in particular South African companies, who have targeted customers in developed markets, such as those in the US, and banking on this arbitrage between a lower cost base, yet very well informed about developed market use cases, going into and disrupting developed competitors in developed markets. So, in fact, the session that you joined us at in Cape Town in May, the showcase that we hold, specifically to bring U.S. investors to South Africa and show them those kind of opportunities. So yes, I'm very keen to hear more, not only from you, Melvyn, but also from other companies that are really taking their African businesses and going to developed markets, in particular the U.S. Great, thanks for that, Melvyn. Toyin, with BabyBliss, I'm curious to hear how you decided to start in 2 markets, or did you start in one market in Nigeria and then move to Kenya, or how did you decide to attack those 2 markets?
So our case is actually a bit of a unique story, because our presence in 2 markets was actually it came about a merger. Because this problem is something that exists. The problem that we're trying to solve, and the niche sort of we're focused on, it's something that really exists in in the whole of Africa. So we merged with a company that was doing so our traditional focus is BabyBliss, and we started off. The founder of BabyBliss started 10 years ago trading baby products out of the boot of her car. So it's one of those kind of stories.
Right.
And the business sort of remained sort of in that kind of state for quite a few years before we really picked it up and began to digitalize it and formalize it, and bring it basically up to 21st century standards. And we were really focused on the products. But in Kenya, there is a business called Mom's Village, which was focused more on sort of the content side, because there's so many gaps sort of in the space, and they were focused sort of on the content and on the community side. And then they recently started looking at e-commerce as a way of, it's a natural progression, right? You bring all the women together, you're within the community, you're sharing pain points, you're both striving to reach to access the same products, and then you say, let's start a store to actually be able to, facilitate that access. So they were on the cusp of doing that when the conversation came about, and we said, why try and build the same thing in several markets? Why don't we just sort of come together, capitalize on our strengths, and try and build something that works across both markets? And once we're sure that it works for Nigeria, works for Kenya, then we can actually take it to Ghana, and we can take it to sort of all the other markets that are parallel to us. So it's a little bit of a different story, but it's been so interesting, just seeing how similar it can be, sort of within 2 completely different countries.
Yeah, it's interesting that you guys expanded to those different markets through a merger. How do you expect to continue that for other markets, or are you looking to expand through mergers?
Well, we're open. We're open. I think we've tried it, it's worked. I think in certain markets, it may not necessarily be a merger as much as, as much as an acquisition. If we get to the level, or if we get to the scale that we're, or when we get to the scale that we're hoping to get to. But it's really, building this thing that is unique, building this thing that serves the African mother, and then just going into the markets. I said Ghana is one of the ones that we have sort of in our line of sight once we've conquered Kenya and Nigeria, because they're still quite we're still fairly early on in our journey, so there's actually still quite a lot of work to be done sort of within those countries that we're currently in. But really just taking it step by step to the markets that make the most sense, where the needs are the same, but where sort of like the structures, the fragmentalization, the sort of lack of access to authentic products or verified services, like the problem statement remains the same, and then we'll take it from there.
And where do you see that? Where are your top markets, if you're willing or open to disclose that?
So next up will be Ghana. I think that's probably as far as we've gotten. Next up will be Ghana. It's sort of the one in line. But for us, it's sort of within the next 2 years, it will be a more solid presence in Nigeria. It will be a more solid presence in Kenya, including. So in Kenya currently we have e-commerce, we have community, but we don't have the physical stores yet, which we think is actually quite important to our business. So we'll be sort of rolling that out and then taking that into Ghana, and then potentially to sort of within our side of the world.
Very interesting. So we're hearing Ghana twice in this conversation with both of you, and also with Falgu from Paystack. I'm curious, switching conversations or topics a tiny bit to the investment side. Obviously Paystack, you guys have been acquired by Stripe, but my colleague Fiona Njagi had pulled a great quote from Prosper Africa that Prosper Africa, the U.S. initiative to increase trade and investment between the U.S. and Africa, is working with BabyBliss to find investors in the U.S. who see the same opportunities and want to be part of the company's growth. So 2 questions. Do you see a lot of investor interest from outside of Africa, in particular the US? And second, do they understand your markets, number one? And are they interested in taking your model to other markets? And that's a question for both Toyin and for Melvyn, as well as for Falgu, of course.
Toyin, do you want to start us off?
Yes. So again, I do always have to say we're still sort of very early on, sort of with our raise. So the discussion so far, we have had really good engagement with Prosper Africa. They've been very useful. Well, it's been very useful at getting in front of the investors. In terms of traction there, I think it's still a little bit slow. At least based on what we're hoping to get out of it. But we are having conversations with a lot of investors outside of Nigeria and outside of Africa, but investors that already sort of understand our niche, because we're not, there's like it's great we have Paystack on here, but there's like the headline sexy, fintech space. And, that's what everyone is talking about. That's what's in the press.
Fintech? I'm sorry, what's that? There's no fintech in Nigeria, is there? No.
That's what everyone is. You look at your product and you're like, should I somehow combine this to make it more, but there's really a lot of innovation that needs to be done. There's just so much work that needs to be done. So for us, it's really, the traction that we've got is with people that sort of understand our space. They know sort of how big sort of e-commerce is. They know the mommy and baby space. They know that parents will spend an obscene amount on their children. They know that there is there's an opportunity around there. So it's really more sort of specific, as opposed to something that has like a broad appeal. So that's sort of our own unique position.
No, thanks for that clarification. Melvyn.
Yeah, it's an interesting one. And I mean, it's something which I often reflect on, because what actually drives a VC to ultimately invest, or any investor for that matter. And I find many of the Silicon Valley investors, You know, everyone can tell a story of how they missed Facebook or LinkedIn or Instagram or Uber. Like everyone's got that, you know, I saw the deck, but I didn't go through it or something of that nature. And so I think what you're seeing now, what's really exciting about the continent is you're starting to hear those stories of African, like, you know, literally like of African businesses. And so from this purpose, the key thing is there's great activity because there's more FOMO coming through. And I think people don't necessarily need to understand the market to appreciate the compelling nature of the businesses being built in those markets. And I think it's often where, for example, one would have said, you know, okay, so Paystack is Stripe for Africa, or this is this for that, and that's for that. And even though it does a disservice to sometimes the nuance and the elements of the startups, but even framing it in that particular lens, therefore makes it more attractive. And I think of our early raises where, you know, you speak to 100 investors, no one wants to lead the round, and you're literally like trying to meet 100 to only close 3. Whereas as you've grown and proven out the model, I mean, our last round now was led by SoftBank. We've got Salesforce Ventures in, including follow-on from Microsoft and a few others on our cap table. And I think now, because we've proven that market, now it's almost, now you have to beat away the investors in terms of that. And I think we're very fortunate to have proven it out, but I definitely find that international investors are seeing more benefit in Africa now. What is funny though is I'm seeing not necessarily as much US interest, but you're seeing other frontier markets, seeing lots of like Asian high net worths or early stage funds coming to the market, seeing some from Israel, some from the UK. Yet one would almost argue if you are a US investor who's grew up where many of the big titans that many of the businesses have analogous models to, you have so much value to add to these businesses. Because think about it, an early stage business. Often the caliber of investors you have is so important because ultimately that's where those are your advisors, those are people you're going to go to. Yes, and later on, they've got a board, advisory boards, they've got all these fancy things. But early on, I think there's almost a bit of an arbitrage. People probably have the skills to add value to businesses, but they're honestly taking the time to immerse themselves in the markets where their skills are most valuable.
Yeah, I think that one of the things that's valuable to have is that connection to U.S. capital markets, right? Even if the advisor, may not be giving a tremendous amount of advice on the operating business, the simple connection to not just the VCs, but also to potential customers and other strategic investors and so on. Let's be honest, the U.S. is one of the most dynamic and certainly one of the largest capital markets out there. And being well connected to that is helpful for any company, whether you're African or American. So I can imagine simply having some U.S. investors on board help as a bridge, if you will, to connect with the U.S. capital markets for further future rounds can be very useful. Is that the case, or have you found connections to or through U.S. based investors useful for your guys' growth?
100%. And I think it's almost those fortuitous conversations that one has that you take for granted. And I think about, so our Series C or even B, bringing on board Microsoft. And I mean, it was literally through a connection through someone who we knew in the US. And it's easy to think like, when you're a big business that it's saying like, look, obviously people knew that you existed and you were out there, but it was one takes for granted the fortuitous nature of an introduction, of something knowing of your business and able to connect the dots. And so 100% agree with you there.
It's the virtual water cooler, right?
Yeah.
Great. Well, thank you for that. Any thoughts from you, Falgu, on international expansion and how investors perceive your company?
Yeah, again, just to go back to Paystack's journey as well, being the first Nigerian YC company, and then in the last 5 years we've had a further like 27 Nigerian companies and I think 50 odd like African companies go through YC, and more often than not, specifically for that reason that you mentioned, Jim, it's for that connectivity to either businesses like Stripe, who have been successful to scale in the US or Europe or other markets that African founders can learn from, but also access to VC money. And I'm talking to some founders now in Kenya, and to Toyin's point, who are building e-commerce businesses and want an investor who has been through the full cycle from startup to growth to exit, to be part of that journey with them. And so if you look at India and China 10 years ago, this is where they started, right? And they've become very entrenched and developed in their own right as local VC markets. And we see Southeast Asia, Latin America, and now Africa also following that trend. And connectivity to US capital has always been quite critical as part of that journey.
Yeah, I mean, to a great extent, that's our raison d'etre as Untapped company. Our goal really is to make those connections, to create that bridge, both in an informal way as that informal water cooler, but also to formalize it in programs like the Cape Town showcase that I met you at, Melvyn, to really get people in the same room and start talking. Great, well, thank you for all those answers. We'd like to open it up to the audience for comments and questions as well. And so if for those of you in the audience, if you do have a comment or a question you'd like to ask one of the speakers, please raise your hand and we'll bring you on stage. We have Jeffrey already on. Welcome back, Jeffrey.
Thank you so much, Jim. Nice to see you again. This was an amazing discussion, and I love how you guys have really tackled the scale question, because I think it's really difficult to scale in Africa, considering the fact that these are 54 different countries and you're competing with startups that are in, one large market with only one regulator to work with, or, and basically a much larger ecosystem to benefit from. My contribution and really question would come from which ecosystems we are to benchmark off of. I've noticed that most of the software-driven startups have benchmarked off of a lot of Silicon Valley startups. And I mean, their solutions work pretty well. And also some acquisitions are coming from that side. In the case of Stripe, but you're also looking at places like Asia, where there are a lot of similar businesses. I mean, it's a more developing world type of situation, and you're also seeing a lot of pretty much the same problems, from a regulatory and also ecosystem point of view. Africa and Asia are some parts of Asia are pretty much in the same situation. And I would say, from experienced founders or African tech giants on this platform, which markets would you benchmark off of when building a startup? Because Africa's ecosystem is still young. There's not that many success stories and that many people to basically whose shoes you can walk in. So even in the case of investors, I've had experiences where when I talk to African investors and also Asian investors, they understand my business, which is pretty much a phone charging and mobile device charging startup. They understand my business much better than when I talk to Silicon Valley-based investors. No offense to you, Jim. You've been on the continent, so you have
used
some
to being
experience.
offended.
Yes, but when I talk to Western investors, it's much harder to drive the point home because they don't fit in. I mean, they don't really understand the concept as much as someone who's been on the continent or who has been in the developing world a lot more. So my question is basically on which markets to benchmark off of and how to navigate the whole dilemma of, where to draw your inspiration from, and yeah.
Great question. Yeah, internationalization, where to go, and the kind of investors who'd like to take that on. Melvyn, Toyin?
I would say, I think, you've kind of already answered it, right? You've got to draw your inspiration from the markets that make the most sense to you. It's this whole thing about trying to build, I put in my mind as to trying to build level 4 businesses when your country is on level 1, right? You're trying to build something that is that other countries have, what we're trying to build here, other countries have solved for it 10-15 years ago. And so yes, we have obviously the pure we have sort of the pure reference point. We can look at them, see what they did right, we can see what they did wrong and just skip those steps. But at the end of the day, when I'm benchmarking myself, I'm looking at the Middle East, I'm looking at Asia, I'm looking at the economies that are more similar to us, because there's just no point in in at least specifically for my product, there's no point in directly trying to align ourselves with an economy that is, you know, just light year, well, not light years, but significantly ahead of us. So that's what I would say to that. We look to the markets that we're more closely aligned to. And I think it actually really helps in trying to learn the lessons that we need to learn for where we are as a business.
And before we go over to Falgu, because I love to hear from you, Falgu, you know, I'd love to, I see a lot of transference of business models to, you know, between Africa and Brazil, for example. But I don't see as much going between Asia and Africa. Am I just not looking, or is it happening and it's just more under the radar? What's your guys' experience?
It's an interesting one, and I mean, just some thoughts. I mean, I did a fair bit of work in China, mainland China, for my post, for my grad school and time thereafter. And I don't think it's Asia and Africa. I just think it's Asia and anywhere else. I just feel like the dynamics and the cultural norms in Asia are different. That being said, though, something I always reflect on, spending lots of time in China and thinking about Weixin or WeChat and how it came to rise, and how some of the most used features in, let's say, a WhatsApp were ones that were in WeChat a long time ago, like voice notes and that kind of stuff. And so I wonder if they're ahead of us, but I think it's almost a slow drip in terms of that cross-pollination. But I do find that Asia, to some extent, is unique in its way.
Gotcha. Well, certainly China. But I would say Southeast Asia, and even South Asia, there's you know, some more economic development similarities. Very interesting. Falgu, your thoughts?
Yeah, I completely agree. And Jeffrey, it's good that you're kind of thinking about, you know, the benchmarks. I think they exist everywhere, and it just depends on the business model that you're trying to build. Jim, you alluded to Brazil. Brazil, in the fintech side of things, you know, from a gap in the market perspective, have the world's highest kind of consumer lending rates out of their banking sector. And so there's been a huge opportunity there for entrepreneurs to tackle that. And that's similar in some countries in Africa too. So you can get inspiration from the new banks, from the Creditases who have become billion-dollar businesses in Brazil. And how does that translate to an African market in particular? And then similarly on the logistics side, where, you know, logistics in Indonesia is probably as broken as it is in some parts of Africa too. What Gojek and Grab have been able to achieve there is not something that will be successful in the US, right? So entrepreneurs are talking to each other across those lines of what's broken in our market, what similar things are broken in our markets from an infrastructure perspective, whether it's payments, logistics, regulation, and what lessons can we draw on that, both from a business model perspective, but also a scaling perspective. Like user habits in Mexico and the Philippines are quite similar in some senses. And some of the VCs that I've been interacting with are globally focused now from an emerging markets perspective, simply to allow entrepreneurs across those markets to just talk to each other and connect in a way that they cannot do with Silicon Valley entrepreneurs. Having said that, I still think that bulk of the capital, to Jim's earlier point, sits in the US. And so that connectivity from a capital and scale perspective is still important. But the conversations between the entrepreneurs are happening more locally.
Yeah, I mean, coming from my perspective as an investor here in the US, you know, there's so much capital here, and ultimately it comes down to supply and demand. You have a lot of overvalued companies, and while the upside is still massive here in the US, I prefer to look for opportunities in markets like those in Africa and potentially Asia because of that supply and demand. So I'm hoping that by connecting more and creating this critical mass globally, so that as you guys alluded to earlier, there are more connections in between, let's see, the Southeast Asian companies with the African companies, with the Latin American companies, that we can create some of that critical mass outside of the US market, but then ultimately connect the capital in the US to those markets. Great. Well, thank you very much for that question, Jeffrey, and for the answers. We have Raj Kulasingham. Welcome, Raj. Welcome back. Glad to have you.
Jim. Hey, Jim. Good to be here. I don't know whether you've heard of the Clapham Omnibus or not, but I'm on one of those right now. So if you hear some background noise, that's because I'm on a Clapham Omnibus. And if you don't know what that is, I'll tell you about it another time. My question is, I was just listening to something the other day, and they were talking about how in the US, one of the reasons that the market is so good for startups is because of the sheer M&A activity from these big companies like Google and Apple and all the rest of it. I think something amazing, like Google did 1 deal a week for the last 5 years, and they bought up companies, and that's obviously not happening, or it isn't there today in Africa. And my question, and I know you've got someone on Paystack, Stripe bought Paystack. Where's the M&A activity in Africa going to come from, and what are we all investing? Where are the exits going to come from? And I know this is a subject that worries me a lot, because I think there's a lot of excitement about the market, but I still haven't figured out where the exits are.
That's a great one. You just don't want to know where to invest, Raj. Okay, I get it. So who would like to tackle that question?
Happy to share some thoughts, but Raj, looking to invest, I've heard of this amazing company called BabyBliss, which hasn't been yet acquired, and so it could be a good play there. But no, look, I mean, ultimately, the question of exits is one which any investor wants to know. And I think if you're an early stage investor, I think to some extent, you probably have a clearer path to exit better than you think. Only because I think to one of the points that you mentioned earlier, where what you see in my experience, and I've invested in a few, I guess, companies in the ecosystem as well from an early stage perspective, is they'll typically in early stage trade at lower valuations. Typically it's local investors, angels and so forth, even local VCs. And as soon as that particular company then gets attraction of, gets the eye of the international, let's say US or developed market VC, you then see almost a re-rate or rating of the valuation. And there are many opportunities to exit in the secondaries from that perspective. Now that's obviously in the mindset of someone who was an early, and you may want to exit, get some money off the table. That being said, even a bit later on, or further along in the journey, I think there is greater liquidity now. And I think the reality is it's almost backing the jockeys who you feel can build global businesses. And I think that's going to be the key thing, because ultimately you won't get the size of exit you require to get your real return unless you're going to build something beyond just your local market, as an example. And so what you do find is, yes, you can list, but the listing markets are a bit choppy right now. But definitely what you'll see is more of the Paystack equivalents, where you're seeing large, successful international companies looking to expand in Africa and don't want to pay the school fees, see they have strong teams on the ground and will rather go to acquisition. And I think this is where Jim's point again comes to the fore around even that connection across the ecosystem. And yes, Paystack was probably more through the Y Combinator ecosystem with Stripe, but I think that's where one will see their value over and above, let's say, a listing as an exit.
Hey, that's great. I have a follow-on question about the early exit point. Jim, you and I've talked about this a lot. I like early. I'm an early investor. I like to have exits. If I can, I'd like to have a baked-in exit, right? And
personally, Raj, I like big early exits, but that's just my
yeah, big and baked in. So big and baked in. That's both. Let's have both. Okay. So my question is, this exit right is something that I've been toying with for the last 4 or 5 years, and it has received favorable some traction in some places, and a lot of places have people say no, you can't have it. And I want to have a discussion around what entrepreneurs see about this, because I think the ability to recycle capital for someone like me is really critical. And I think for being able to back you at an early stage, you should get me off the bus when I want to get off the bus, and not keep me on my Clapham omnibus, which is still I'm on, for 10 years. So I'd love to talk about that. And one of the things that Jim, you and I talked about, and I've developed, is this idea of an exit agreement where you can actually say to an entrepreneur, look, I'll back you, I'll give you early money, but I want to get off the bus at Series A or Series B or whatever.
Would anyone like to address that question, comment?
So yeah, look, I haven't come across it in my rounds, but I guess so, to be fair, I was dealing with more international investors, and they were on for the ride. I mean, our first round was a YC safe, and then thereafter it's been fairly stock standard. But I think ultimately it comes down to willing buyer, willing seller, what someone's willing to tolerate. And so an entrepreneur can say, yes, against my common stock, you get a pref, and therefore you have the right to exit. I think the challenge often comes is if there are other let's call it professional investors or other investors in front of you, and those who come in after you, who will then squeeze those terms out of the way, or just to try and minimize the actual securities in your actual class of shares. And so I think it actually can make sense. And also you'll be surprised, as an entrepreneur goes on their journey and their scale, they actually do want to clean up their cap tables. And so I think if one positions it that way, saying like, look, we know that, look, the value add we can give it between seed and Series A. Series C, we're just going to be on the ride, we're going to be too small and diluted. I think that can be more acceptable given the context in which it's given, as opposed to being like, well, look, you got to Series B, I didn't think you'd make it there, I'll take my money and run, as opposed to saying for the next phase of growth, happy to go along. So I think there could be some traction there.
Yeah, interesting. Thanks for that, Melvyn. Toyin, Falgu, any comments?
Sorry, go on. Go.
No, go.
No, I was just gonna say, yeah, I agree with Melvyn. I don't think, I don't think that the entrepreneur is sort of looking at you and trying to like, I guess hold on to you for longer than you need to be held on to. So, yes, I think it depends on sort of the way the agreements are phrased. But it does make sense, obviously giving your position and giving sort of the way you invest that you want to get out sooner rather than later. I think that a lot of the businesses that we're building, we'll end up getting sort of the exits in from the kind of companies that you've mentioned, because why is Google able to invest in a startup in Silicon Valley and not one in Nigeria, right? It's really just a matter of focus, it's a matter of time, it's a matter of just familiarizing themselves with the ecosystem. It's a matter of sort of where we're going. So I think it's just a matter of time before we start seeing all those kind of activity going on that you want to see. Right.
Okay, so if I come to you and I say I'm going to invest in your next startup and I want an exit agreement, you're going to give it to me, right?
Depending on how you phrase it. You see, it's all about the fine print, Raj. It's all about it's all about the fine print. But in theory, yes.
Can I just give you advice? I would stop it. Raj is a lawyer. I don't know if you want to start.
I don't want to talk about fine print anywhere near him. Then thank you for giving me that. But you see, you look about it the other way around, right? You want to exit. Yes, you want to exit quickly. But that being said, we kind of had the joke about it that people say, oh, I saw Facebook or I exited. You always see those those monologues on LinkedIn about how I exited way too early from this investment, and now the company is worth zillion times worth my whatever that percentage was. So it's always there are two sides to the coin, I'd say.
Yeah, indeed. And I think this is obviously getting in early and getting out early is a very viable investment thesis, especially for smaller tickets and spreading the risk around. But I think the big elephant in the room really is this question about the larger exits. And I would argue that it works in the US and it works in US tech because there is a very active IPO market, right? Ultimately, you are the VCs, the startups, everybody's benching up to get to IPO. Even the larger guys, not necessarily Facebook and Google, but even they are adding to their pile so that they can increase their public share prices, or if you're a smaller company, going IPO with the right revenues. So without that kind of consolidated public market in place, or the ability to sell into one, which is again going back to what I mentioned earlier about taking African companies and getting them into the US financial markets. Without that, I think it's really tricky. I think exits can be very challenging for larger companies unless you have the strategic trade sales lined up well in advance. And those are hard, Paystack notwithstanding, they don't happen that often. And even the economics aren't quite as good as going IPO. Anyways, my 2 cents.
Could I add something?
Yes, please.
I listened to someone, I think from Founders Factory Africa, early last year, I guess.
Well, you just queued up Rajiv very well then. He's next on the list for question.
Yes. And he said that, actually it was Rajiv, I think. He said that instead of looking for unicorns, which are fictional animals, to basically model our startups around, we should look for much more realistic African animals and building gazelles, which are startups that are valued at around, I think, $100 million and generating about $20 to $50 million in revenue. So not looking at the exit plan of Silicon Valley type startups, but looking at running or building more profitable startups that can generate revenue over a long period of time, which is what most of the multinationals and corporates in Africa are actually doing currently.
This whole gazelle, zebra, unicorn discussion.
Camels as well.
Camels. Yeah, exactly. Antelopes. What I think is interesting is we should just get down to what we're really talking about, which is the outsized IPO returns that you get from going from a $6 pre-money valuation to a $30 billion or $50 billion valuation. Those exist in the US, and they're actually quite common. And that phenomenon, I should say, drives the behavior of most VC firms. That drives the economics of most VC investing. But if you cut and paste that model into Africa, you're missing the opportunity, right? You don't have that, but it doesn't mean that the markets don't work in Africa. You just have to adapt your investing style to how what the opportunities are. And so I would argue that there are a lot more companies out there that are, whether you want to call them gazelles, antelopes, or whatever it is, there are a lot more companies out there that maybe won't get the 300x or 1000x returns. But you know what? They're going to generate returns faster and more consistently, and in a way that scales very, very well without going to the IPO markets. What we're trying to do with SMEs and funding SMEs is a good example of that. So I think people need to think differently about how to invest in different markets and not just cut and paste. In the same way that if you just cut and paste the VC model from the US to China, that really wouldn't have worked if you just did it without thinking and understanding the Chinese market. Same thing with Africa. You really need to understand the African market before you can invest. Anyway, my 2 cents before I pass it on to the experts. But Rajiv, were you misquoted? Is there another animal we're missing?
Thanks, Jim. I just want to check. Can you hear me? Okay.
We can hear you perfectly.
Okay, fantastic. Jeffrey, I don't think I've ever had a more natural introduction in my life for 2 reasons, because you've referenced me, but you've also teed up the question that I wanted to ask. So I'm going to follow on from that, talking about IPOs and those sorts of things. And I want to touch on it, not necessarily from the perspective of exits, but more, bringing it back to the focal point of this discussion, which is as you're building businesses. So just removing ourselves from exits for a second. And the question I have is around this.
We're only talking about making money here. We're not talking about anything else. Sorry, go ahead.
sorry. Am I in the wrong in the wrong Clubhouse chat?
Go ahead.
So the question that I have, or rather the very quick qualifier, because I don't want to make this a long drawn out statement, is around the concept of customer acquisition costs. So the statement I'm going to throw out is something that I think we've all heard many times over the last couple of years, which is, in this particular market, we don't have the consumer market, the consumer purchasing power to build B2C businesses, which is ultimately what you need in order to get to the scale for IPOs, right? So the investor narrative has more often than not been, I'm comfortable in this particular market looking at B2B models. So I'm going to in a cheeky way, since we've got three speakers, I'm going to ask 3 very quick questions. And so maybe for Melvyn, is this notion of Africa is not yet capable of delivering scale for B2C models, because we don't have the consumer market. So if you're going to build a scalable startup, you've got to build a B2B or potentially B2B2C business. Does that narrative still hold? The second, or part B, maybe for Toyin, is within the context of a VC timeline. What we find is that if you can't build a B2C business, you've got to go B2B. The problem we have, or that we see in our portfolio, is that the sales cycles for many corporates in the African context is so long that you don't generate the traction you need to get that B2B sort of customer growth that you need to fit within a VC timeline. So, you know, that poses a bit of a constraint. So you can't necessarily grow more organically because you're trying to fit within a VC timeline. So what do you do? On the one hand, you can't build B2C because there's no consumer market. On the other hand, sales cycles are just too long for B2B models. And then the third part is, I think for Falgu, some of the companies that we're now seeing that have that scale, like a Paystack, Flutterwave, are now starting to build the blueprint to scale into other markets for startups to follow. So the question to you is that a blessing or is that a curse? Because it creates this sort of unnecessary pressure. I think what's really cool is that I don't necessarily have to follow a corporate partner into their markets for distribution channels. I can now use a new strategy, which is let me follow a Paystack. But how do you view that?
So I'm happy to kick it off. And I don't want to be one that answers the question and drops the mics and exits left. I meant to drop off in like 5 minutes or so. But to jump to your question, I would argue that the consumer markets, and I think of my days as a management consultant at BCG, the consumer markets are very active in Africa. I just think the question is, to your point around cost of acquiring a customer versus lifetime value. And I think where the onus comes on the entrepreneurs to say, are you thinking about your actual money, to the point where we're in this room? I'm thinking about your money up front. I think you can invest a lot into building consumer brands, consumer businesses. But I'd argue that definitely from a B2C tech perspective, Africa is a good play. I'd even say, look, our business is mostly B2B or B2C or B2B2C. And the reality is, I would argue that it's harder to do B2B on the continent now than it is elsewhere in the world, only because of the maturity, buying software, all that good stuff. I think B2C is where the future is on the continent, if I'm honest, but I definitely think it's possible.
Yeah, I'm just going to comment on the back of that. I think for me, what is absent is what I sort of like to think about as a primed consumer market. The consumer market is there. You know, Paystack won't be generating, when you think about it, they're a payments company, right? So they're doing payments off the back of some sort of activity. So that activity exists. What the issue I think is that it's not necessarily formalized. It's not. It's just not as standard as you would compare with the US or sort of any other developed market, but it's clearly there. For us, it's a huge market. And so what the challenge really is trying to think about ways to formalize the market, to change consumer behavior from what is the norm to what actually could serve our business. And then also to think beyond. I think we don't have the luxury to choose sort of one thing and say that we're offering one thing to the consumer. We've got to, and we don't even have the luxury to dictate what that one thing is. We basically, are in this process as a business of getting to know our mothers and our sort of the market that we serve, and really looking at where they're, where they're most likely, or where is the warmest sort of path to acquiring them and just following them in that way. So I think that it's for us, B2B is not the market we serve. It's B2B, it's a B2C space. What we're doing as a business is just looking for opportunities sort of beyond just one thing. So we've sort of just launched a big push into sort of the services space. So we traditionally focused on products, and now we're offering services again to sort of maximize the lifetime value out of the customers. But again, I think we're in this exciting place where the market is changing rapidly. 5 years ago, I'm a big fan of Paystack because they allow me to indulge my e-commerce habits to the wildest. But 5 years ago, we didn't have the kind of businesses that we have. We didn't have the ease of doing business. We didn't have the ability to just sit somewhere. Jumia did not exist 10 years ago, and I'm surprised they haven't even come up in this call at all. But there's just so much growth that is happening, and so it's really for investors that are interested in waiting that out. It's not going to be a US Silicon Valley story, but it's not realistic to sort of align us against that standard. But that's me. Over to you, Falgu.
Yeah, thanks. And just to run off the back of that, when we talk about, scaling to other markets, I mean, to Toyin's point, Paystack now, what we're pulling through our platform every month is almost 10 times what the entire country of Nigeria was doing online when we started Paystack in 2016,
10
right?
times.
So we're just one of the many where, if you put us and Flutterwave together, you can only imagine what that number looks like. And so I see like our product is essentially an infrastructure layer. And if we take that to Kenya, if we take that to Egypt, we take it to other places, our customers are coming with us. And this is one of the reasons that Stripe acquired us, right? Their customers want access to the African market. Netflix, Spotify, everyone wants to access the African consumer. And so, like to Toyin's point, it's there, the demand is there, and we're just enabling the access to it.
Very interesting. Thank you very much for that, Falgu and Toyin. Melvyn had to jump off for an urgent call, but I wanted to go to the next person, and gosh, it's Tayo. Talking about small world and creating critical mass. Tayo and I met each other in, 2004 in Abuja, Nigeria, drinking Sunday drinks at the pool at the Hilton in Abuja. So it's great to see you in the ecosystem after more than 20 years, or not 20 years, more than 10 years. Tayo, I'd love to come on the stage and I'd love to hear your question, comment.
Thanks so much, Jim, for the introduction. Yeah, it's definitely great to see you here and to participate in these really informative conversations. And I've very much enjoyed this one. Really appreciated Rajiv's questions. And so mine is kind of a piggyback on your comment, Jim, about cutting and pasting, because whether you're aiming for unicorns or antelopes or something else, the goal kind of informs how the incentives align. And so whether you believe, and it's been really interesting to hear those who have been making credible cases for consumer markets, but from the LP perspective, whether you believe that the consumer markets are not well developed or not enough, or you do or you don't believe that, if you don't believe that, I guess my question is, if you are a GP, how do you not cut and paste if the models that LPs are buying follow a logic that you don't subscribe to? Because I think there are GPs who have different perspectives on this. But at the end of the day, I don't know how easy it is to sell contrary logic to LPs. And then the other thing I'd like to add very quickly is that something I've been thinking about more recently and don't really understand very well is the factors that enable consumption. So if the markets are there, what things need to be in place? FinTech, I think you can have a long conversation about that, need to be in place to truly unlock those markets. Thank you.
That's a great one. I think you really hit the crux of it, which is when the GPs have to sell something to LPs that don't understand the market, what happens? Well, we kind of know what happens. And I think the interesting thing is that there is process of education. And I think one of the reasons we do these forums and bring people to places like Cape Town and to just explore the market in general is a very slow process of LP education, or I shouldn't say education, that's somewhat arrogant, but at least awareness building about the differences between the different markets. And so I think that's really the crux of the problem. And one way to resolve it is let's have more local LPs. Let's get more local investors or investors who understand the African market, the local markets, become investors in some of the funds, not just have international money come in. I mean, to a great extent, the way I see it at least, it's just another form of neocolonialism. And so let's fix that. Let's figure out how to get better informed investors, more local investors, and bring people closer together. I'm sure others have Toyin, Raj, Falgu, Rajiv. Love to hear your comments.
Well, Jim, Vishal and I, who are always investing with, we have this thing, right? That if you don't see local investors in the cap table, then there's something wrong with the startup, because local investors are the ones that are going to make the difference in the early stage, especially. So, I think one of the things that we're trying to do in a small way is to sort of galvanize local investors in the jurisdictions that we are familiar with, which is Nigeria, Kenya, South Africa, to say to people who are potential angels, to say, look, there's a nascent asset class. There's a lot of interesting things happening. You can actually add value. Why don't you come and join us on our journey? So I think if more people did that, I think you find, because a lot of people are just afraid of jumping in, right? So if you had people who can say, look, understand the risks, but we've been there, we've got the scars, come with us. You might make some money, you might lose some money, but you'll learn a lot and have some fun.
I think
go ahead, please.
I was just going to say, I think Rajiv and I had this conversation maybe about a year ago. But there are, and to Raj's point, I think there are more kind of operator syndicates that are emerging that do kind of bring credibility, that stamp of approval to building out, meaningful check at the earlier stages. And that demonstrates kind of local appetite for deals. I think the gap really on the local stages between the A and B, when founders are looking for the $5 million checks before, the Tiger Globals and SoftBanks kind of come in. But I think, to your point, even mobilizing local institutional money, I think it's going to be a kind of decade-long exercise, but something hopefully that, we'll begin to see in markets like South Africa, Kenya, Nigeria, where there is good pension money available. It's just not being allocated to any kind of private equity asset class at the moment.
Yeah, I think just piggybacking on that and something potentially provocative, I think that the general narrative, again, just listening mostly to GPs, is that, well, the LPs don't understand the local context. My view is that if you're an LP sitting in London, for example, and you're talking to most of the African GPs that have raised funds, because they're all coming to you looking for follow-on funding or raising new funds, you have a pretty good understanding, because everyone is telling you what their thesis is. I think you've got a pretty good understanding of the market. You're just not as bullish about the ability to generate VC returns in one market. I was talking to a friend of mine who is an LP at a DFI that we all know, and she says, my mandate is to look at two markets, the African market and India, and every GP I speak to in the African context is telling me a story that I know is not true. And so I choose to put my focus more on the Indian GPs as a market. I think what we do need to work on as far as education is concerned is the local institutional pools of capital that need to get comfortable around the risk appetite that it takes to increase investment in this asset class. So I think the problem of offshore LPs not understanding the market is more of an excuse. I think we need to focus more on building local institutional LP risk appetite, not understanding of the market.
Yeah, oh, indeed. Well, thank you very much, Rajiv and Tayo, for the question, comments, and the answers, everybody. We're past the top of the hour. I do want to thank everybody for joining us this week, this month. And please, we'd love to hear from you on new ideas for what we should be talking about and who we should be talking with. And to do that, please join our WhatsApp group. You can go to our website, untapped-global.com, and click on Engage to access and join a WhatsApp community. And I'd love to hear your feedback. And with that, thanks everybody for joining this week, and hopefully we'll see